If you're tired of shopping around for a mortgage, you might turn to a mortgage broker to do that shopping for you. But do you understand what a mortgage broker actually is and how they compare to other lending options that are out there? Today, we're going to talk about how mortgage brokers make their money, banks versus brokers versus direct lenders, what's the difference, factors to consider, questions to ask, and how to find the best option for you. So, how do mortgage brokers actually make their money? Yes, they're going to shop around and try to find a mortgage for you, but they're not doing that out of the goodness of their heart. Of course, they're getting paid to find you that mortgage and originate the mortgage. So, mortgage brokers get paid one of two ways. They're either going to charge you origination broker fees up front, which become part of your closing costs, or they're going to get what's known as lender paid compensation or lender paid commission. But where does that lender paid commission come from? Well, it's actually built into the interest rate, which means you're going to receive a higher interest rate in order for them to get paid. Now, that may make sense to them, but does it really make sense to you? Is it worth taking the higher rate to have them do their shopping? Something that you might be able to do on your own anyway. The thing is, you can determine what these brokers are actually getting paid because it's getting listed and it's required to be listed on the documents that you're going to sign, specifically on the loan estimate. And if you want a deeper dive into a loan estimate, check out my video on closing costs and how to review a loan estimate. But Section A of that document is actually going to show you any broker fees that you're paying to obtain the mortgage. Maybe not directly, but indirectly in the form of a higher interest rate. Now, let's talk about banks versus a broker versus a direct lender. So a bank, we all know banks, right? Bank of America, Wells Fargo, Chase, it's where you do your banking, right? It can even be a credit union, can fall into the banking. You know them by name. The thing with banks and a pro for banks is they may offer maybe better terms if you have a banking relationship with them, right? From time to time, they might offer a little bit off your interest rate or a little bit off cost or a free appraisal because you have an existing checking account or savings account with that institution. But the things you need to keep in mind that are cons when it comes to a bank are, for one, they have limited hours of availability. You may know the term banker's hours. Well, that term exists for a reason. 9 to 5, Monday to Friday, right? Well, what if you work 9 to 5, Monday to Friday? When are you free to speak to someone that's handling your mortgage? Probably after 5. So if no one's available at the bank after 5 p.m. or on the weekends when you might be available, or when you're doing your home shopping, well, a bank might not be a good option for you. They often have inexperienced, or I should say less experienced, individuals working at the bank handling the financing because they're doing other things other than mortgages, right? You want to keep in mind, banks don't only handle mortgages. So they typically have the bank teller trying to push a mortgage to you. You know, it's happened with us and some of our clients sometimes, right? They go to the bank to get a cashier's check that they need to use to give their deposit on their new home. And the bank teller says, oh, what's this for? I'm buying a house. And they try to get them to speak with their mortgage specialist to get a mortgage. The problem with the bank is that mortgage specialist is also doing auto loans and CDs and high yield savings accounts, right? They're not focused on one specific thing in most cases, which means they're not as well versed when it comes to getting you qualified for a mortgage. So that's important to keep in mind. Now, let's talk about a broker, right? We were talking about brokers do the shopping for you. Well, one thing I can tell you about mortgage brokers is although they have the ability to shop around for a mortgage for you, most don't. Most mortgage brokers have one or two different lenders that they send the loan to, and they act as a middleman in that transaction. They might tell you they have 150 lenders that they work with, but I can tell you no one is shopping your loan around to 150 lenders. They're most likely going to go to the lender that maybe has the easiest process for them or is paying them the most money for the interest rate. And that's just the truth, and that's just how it works, right? Yes, they should have your best interest in mind, but they also have their best interest in mind. So you want to consider that. But brokers can shop around, as I said, right? They have the ability to do that. If they do it, is a different question altogether. They get paid on a fee-based schedule, meaning that they've set compensation with each of the lenders that they have a relationship with. So a broker can't be paid more than 2.75% of whatever your loan amount is. That's the maximum. You might find some brokers who are willing to do the job for less, some that are willing to do it for that maximum, and then some, of course, anywhere in between, right? And they're responsible for communicating directly with you during the process. So that is a nice thing because you typically have the one point of contact. You're not dealing with call centers and so forth as you might when you're dealing with a bank. The cons is they have less control over the process. And why I say that is because they're not the ones who are handling the processing or the underwriting or the funding, right? All the nuances that go into the loan outside of just the conversations with you as the borrower and getting your loan set up. They have to rely on whatever lender they're using to do that job. And that lender has their own turn times, meaning the amount of time that it takes them to do each step of the job. So underwriting, for example, if a lot of brokers are sending business to one specific lender because maybe they're paying them a little bit more in one given month than another for conventional mortgages, as an example, that can cause their underwriting turn times to take longer, right? Which means that it's going to take longer for you to get your loan approved. And if you have a loan approval period in your contract, as everyone does, and check out my video where I talk about the important sections of a contract, but you have a loan approval period that you need to meet. And if their turn times at the lender the broker chooses are beyond that, well, now it's putting you in a situation where your earnest money deposit is at risk. So the lack of control is a big piece, and they're often a one man or woman, of course, show, meaning it's just them. We jokingly talk about this, but they're sitting in their basement, doing a mortgage here and there, and that's not even their full-time job. A lot of mortgage brokers have a full-time job, and it's not being a mortgage broker. It's whatever other job they have, and they happen to have their mortgage broker's license that they hung somewhere, and they'll go ahead and they'll do the loans on the side. We see this often with police officers and firefighters where they know they have a group of individuals that they work with that trust them like a brother or sister that will come to them. But, it's crazy to think another police officer using the police officer to do their mortgage. They know how much they have to work, how much time they actually have to devote. Why would you do that? But long story short, it's typically a one-man show, not always, but most often. And, as you can imagine, one person can only do so much, right, is the point. Now, direct lender. A direct lender is similar to a broker in the sense that they're able to access lower interest rates and they would have access to different investors for your mortgage. The bigger difference is, though, is it cuts out the middleman. It's a faster process because those things that are handled by the lender when you're dealing with a broker, right? I talk about underwriting, turn times, and so forth. Processing is all handled internally. So the speed is controlled by the direct lender. So as an example, I am a direct lender. So as a direct lender, we can underwrite a loan the same day, regardless of how many loans we have in our pipeline. If someone needs to have their loan underwritten because maybe their contract is falling apart, they had a bad experience with another lender, it's being turned down, we need to step in and save the day, which does happen, we can do a same-day underwrite. We can close a loan in as little as 7 calendar days, which is legally the fastest you can close, right? We have full control over that, as do other direct lenders. They're controlling it because they're handling the process. They have their own underwriters, their own processors, their own closers. And when you control those things, it makes a much smoother process for you, the buyer. The hours are more flexible, right? There's not usually set hours when you're working with a direct lender. Now, some may have them, but I can speak for us. We're available 7 days a week. We're available pretty much every hour of the day, 13 hours a day for sure. And if we're awake, we'll respond is more or less our motto. Which is huge, right? We talked about you might work 9 to 5, or who knows what your hours are. Long story short, we as a direct lender or other direct lenders would work around your hours, not you try to work around theirs, right? You're the buyer. You're the one who needs to be the one that's being catered to. Guidelines are more lax. And you know what? I apologize. I wanted to touch on something. I'm just going to go back real quick, circle back on this, to banks. something else with the banks outside of what we talked about, which are more customer service related, is when it comes to mortgages, everyone follows the same guidelines. However, a lot of banks have overlays that they put in place to the guidelines. Overlays are essentially guidelines to the guidelines. So an example of an overlay, if FHA mortgages allow you to go as low as a 580 credit score, in some cases 500, and if you want to learn more about FHA financing, check out my video specifically on FHA financing. But if the guidelines allow you to go down to a 580 credit score, the bank might say, well, for FHA financing, we require a 640 credit score, right? 60 points higher. That would be an overlay. Banks have a lot of overlays because they're risk averse. They don't want to have to lend this, certain buyer profiles, credit score being one of them, right? So now let's go back to direct lender. Direct lenders do not have these overlays. So we lend on whatever the guidelines are. If FHA allows you to have a 580 credit score, then you have a 580 credit score, you can get an FHA mortgage, assuming you meet the other requirements, your down payment, employment, and so forth, right? So that's another big one. And of course, personalized service to you as an individual, right? I know with us and just about every other direct lender, or most I should say, you're not just a loan number. You're not calling into a call center when you call for an update on something, or you're returning a call from that lender. As with a bank, in most cases, you're calling in, it's a call center, you have to give your loan number. I don't know a single one of my clients' loan numbers. I don't know their property address. What I do know is their name. And that's what you get when you work with a direct lender. More personalized service that's catered to you as an individual, not just as a loan. Now, factors to consider, right? So a mortgage broker or loan officer, as I said before, should act in your best interest. That's extremely important, right? We have fiduciary responsibility to act in your best interest. They should work closely with you and understand what your financial goals and needs are. Not everyone's financial goals and needs are the same when they're buying a home. Everyone is looking for something different. You might have a couple people that happen to have the same goals, but that's very rare. Most people have their reasoning that they're trying to accomplish this, and they're all different. They should use your financial information to help you accurately understand your borrowing capacity, right? That's typically done during the pre-approval process. So it's important to get everything from you up front, along with what your goals and financial needs are, and do a full review of that with you in order to determine your borrowing capacity and help you understand what that is and why it is. And they should help you select the home loan options that best meet your needs and your goals. As we've already said, everyone has different goals, everyone has different needs when it comes to the mortgage. And it's important that whoever it is you're working with takes the time to understand what those are for you and explains the different options and helps you determine which is best to meet those goals and needs. Now, there are questions you should be asking anyone you're speaking with on the lending side when it comes to qualifying, right? So things you want to ask, simple questions that may not even come to your mind as you're on the call, right? You lose your train of thought or you go blank, right? We see that happen all the time. And that's why I always like to end my calls with, are there any other questions you'd like to ask? Is there anything I haven't answered for you? Right? So I'm going to help you out. I'm going to give you some important questions that you should be asking yourself and the lender that you're speaking with, whether it's a bank, a broker, or a direct lender. So do you offer any special loan programs? So special loan programs would be things for first-time home buyers, maybe no money down, right? Special loan programs such as that. Maybe they have programs that are for buyers who have a certain income level. They're giving some sort of credits. I know right now Fannie Mae has a program. If you're buying in a specific area and your area median income meets specific requirements, they're giving $5,000 toward your down payment, right? That would be a special program that you might be eligible for, but not every lender or bank or broker is going to tell you about those without you asking. You don't want to assume they're just going to say, hey, we have these special programs. So it's on you to say, do you have any special programs that I may qualify for? You want to ask what their fees and charges are. Lender specific. You don't want to get caught up on third-party costs because you're going to have the same third-party costs when you're buying a property regardless of who's doing the loan. By third-party costs, I'm talking about the title company, talking about the government charges, setting up an escrow account, an appraisal, a survey. You're going to have all those costs regardless of who's doing the mortgage, and it can get overwhelming. So check out my video on closing costs and how to understand them properly. But you don't want to focus on those things when you're trying to find out what the lender's charges are. That's all you're concerned with when you're looking for a lender, a bank, or broker. What are their specific charges, right? Underwriting fee, processing fee. Is there an application fee? Some brokers I see charging for a credit report up front, which is absolutely crazy, right? They're charging you to pull your credit. There is a cost involved, but that's a cost that we as a direct lender incur, right? But you want to ask about those types of costs, discount points, and so forth. What type of home loan is best for me, right? Well, is a loan officer asking questions like, how long do you plan to keep your property? Or do you move around often for your job? I know that when I'm talking to someone who tells me they were just relocated to Florida, for example, for their job, and they're an engineer, and I asked them about their previous address history, and I see they've been at their previous address a year, the one before that a year. Well, that tells me they probably move around often. And so a question I ask is, are you relocated often for work? And the reason you ask those types of questions, and it's important, is because maybe a 30-year mortgage or 30-year fixed rate, I should say, isn't the right loan option for someone who moves around often. Maybe they want to look at an adjustable rate mortgage that might offer a lower interest rate for the period of time they're actually going to be in the house, right? So you want to know that. What type of loan is best for me? And make sure the lender is asking you the questions that allow them to provide the information accurately to you. What interest rate options do you have, right? Fixed rate options, adjustable rate options, as I actually just said. Right? You want to know all of your options and why you should go with one over the other. Make sure the lender's explaining why it might make sense to pay discount points versus not, or try to get a temporary rate buy down versus not. And make sure to check out my video on both of those subjects. But those are things that will help you make the home more affordable. So it's important to know what type of interest rate options are available to you. Should I pay points, as I actually just mentioned? They need to let you know when it makes sense to pay points, when it doesn't make sense to pay points. What is a point, right? So you want to know all of that. You need to ask those questions up front. Now, how do you find the best option for you, meaning a bank, a broker, or a direct lender? Well, I would think most of us, especially if you're watching this video, are online, right? So we'll start simple. Online search. Right? Top mortgage broker, Florida, if that's where you're looking. Top lender in whatever area you're looking for, right? That's a Google search. It's really that simple. You can, go on websites like Zillow or Realtor.com, and you can actually look up lenders on those sites, and you can read reviews from past clients. What's nice, and even Google, but what's nice about the third-party site reviews and not reading reviews on the lender's personal website is that the lender has no control over what someone writes on a third-party website, but they have full control over what shows on their website. So go on Zillow, Google, whoever it is, mortgage lender, or just do a search for mortgage lenders in whatever city you're looking for, and you're going to get hundreds, if not thousands, on Zillow. And you'll be able to read reviews. Maybe you want to sort by most 5-star reviews or whatever the case may be, but you'll be able to read, see what people have to say, and then you can make an educated decision based around that. When you did speak to lenders, did they ask you about your specific goals and are they helping you meet them? Did they just pick up the phone, take a general loan application asking you what you do, how much you make, and how much you want to put down, or did they actually talk to you like a person? Hey, what's bringing you to South Florida? Oh, I'm looking to purchase a home that is in a better school zone for my kids. They're going to be going into elementary school next year, and I just want to know that I'm in an area I feel comfortable with A-rated schools. Whatever it is, everyone has different reasons for why they're buying home. They have different goals, as I've already said. Make sure your lender's asking you what those are and actually trying to help you meet them. Do they offer a specialty loan? Like I said already, ask them, do you have any special loan products, right? What makes them unique? Do they have something that's not being offered elsewhere? Right now, Hometown Heroes is a big down payment assistance program in the state of Florida. It just re-released funds a couple of weeks ago, but not every lender is offering it, right? So, you want to make sure that you're asking these questions. If you want that program and one lender isn't offering it, but another lender is, and you feel you need that and qualify for that program and it's going to help you buy a home, you go with that lender that has the specialty loan program that the other one doesn't, right? What's their availability? We touched on this. Are they a bank 9 to 5, or are they available when you need them to be available? No, you don't have to take advantage of them and the fact that they're willing to be accessible to you, but will they pick up your call, respond to your text, respond to an email outside of traditional banking hours, right? That's something that could be important to you. I know that the average buyer is shopping for homes on the weekend because they're working during the week. So you probably want a lender that's going to be available to answer questions about properties you've seen, maybe run payments for you on the weekend when you're actually looking at homes, not when you're sitting at a desk at work. And what are their modes of communication? So I just touched on this briefly as well. Do they only answer phone calls on a work line while they're at work? Or do you have their personal cell phone? Will they respond to emails all of the time? Can you text them if that's something you're comfortable doing, as most people are nowadays, right? You want to know that. If you have one method and one mode to contact your lender, that's probably an issue, right? Especially if it's a work number. Maybe it's a fax. Who even knows? That's even better. But the point is, you want to find someone who is actually be available to you when you need them to be available to you. So just keep that in mind. If you felt the information in this video was helpful, please leave a comment below. I reply to all of them. And subscribe for more videos just like this one.